When you open a modern economics textbook, you can't help but assume something like this. Global finance, designed by governments, fine-tuned by central banks, perfected by economists with clean charts, a comforting fairy tale. But the real story, much older, much stranger, much more human. Long before institutions, laws, or anything resembling a financial system, the world's money flowed through hidden networks, merchant diasporas, religious orders, guilds, family dynasties. There were underground trust systems moving money across borders in eras when even states couldn't manage it. The first global financial networks didn't run on laws. They ran on relationships, on loyalty, and often in the shadows. Welcome to Empire Economics, the foggy frontier where money, power, and history collide, where nothing is ever as simple as it looks. To understand why these networks existed, you need to imagine a world that's basically prehistoric in financial terms. No central bank, no stock exchange, no deposit insurance, currencies that don't match across borders. A king goes bankrupt and shaves metal off the edges of coins to create new money. International trade is a gamble against pirates, warlords, plagues, and bribed officials. Sending money across borders requires a level of trust even governments can't guarantee. This wasn't just a risky environment. It was full-blown financial anarchy. And in this chaos, global trade depended not on state authority, but on identity. If you belonged to a network, your money could travel thousands of kilometers safely. If you didn't, you were alone. That's why the first global financial systems were built not by states, but by communities. One of the most striking examples was the Jewish merchant diaspora. From early medieval times onward, these traders, later Sephardi and Ashkenazi networks, moved easily between Christian and Muslim worlds. They were multilingual, fast, and tightly connected across Europe, North Africa, and the Middle East. Where others saw borders, they saw opportunity. Where kingdoms struggled to communicate, they relayed letters securely through cousins and partners. These networks built the first reliable international credit systems, loyalty stronger than local law, but they were far from the only ones. Across the Mediterranean, Venice and Genoa were weaving their own financial empires. Their trading houses invented marine insurance, early joint ventures, sophisticated credit partnerships. Using ship registries and diplomatic reports, they built intelligence networks that delivered information weeks before their rivals. Venice wasn't a city, it was an operating system powered by merchant trust. Genoa, meanwhile, financed Spain's imperial wars with a mindset eerily similar to a modern hedge fund. Further north, another network rose, the Hanseatic League. From Lubeck to Riga, Hamburg to Gdansk, they unified dozens of cities into a single commercial organism. They standardized weights, contracts, credit terms. Hundreds of years before corporations existed, this network functioned like an international company. The Hansa proved that coordinated networks could be more powerful than kingdoms. Further east, the Armenian merchants of New Hulfa emerged. In the 1600s, they ran a trade web stretching from Amsterdam to Bengal, from Isfahan to Manila. Family ties, multilingual letters, and internal arbitration allowed them to operate safely between rival empires. Their reliability made them indispensable to both Safavid rulers and Europeans. Everywhere, the pattern was the same. Networks provided the trust that states couldn't, but the most dramatic example came from an unexpected place, the Knights Templar. Founded in 1119 to protect pilgrims, these warrior monks accidentally created something far more powerful: finance. They built secure bases across Europe and the Levant. They took deposits. They issued coded letters of credit redeemable across continents. They invented an early form of international money transfer. Their rising power became dangerous. In 1307, the bankrupt French king Philip IV targeted them, arrested them, seized their assets, and dissolved the order. But the financial network they created didn't die. It simply merged into others. By the late Middle Ages, power shifted from orders to elite families. The Bardi, Peruzzi, Medici, and later the Fuggers. They built the backbone of European finance. They invented modern accounting. They funded kings, popes, and empires. The Fugger family even financed the election of Holy Roman Emperor Charles V, proving that private finance could determine public power. Their strength didn't come from armies. It came from speed of information and credit leverage, the same forces driving today's markets. Then came a network that changed the game entirely, the Rothschilds. They didn't invent international finance, they perfected it. Earlier networks relied on caravans and slow letters. The Rothschilds built Europe's fastest private communication system, faster than royal couriers, military messengers, even state intelligence at times. In finance, information isn't power, it's profit. They understood this earlier than anyone. Each brother was deployed in a major European capital: London, Paris, Frankfurt, Vienna, Naples. Through coded letters, trusted couriers, and family loyalty, they functioned like a perfectly synchronized machine. They financed governments, moved money between warring sides, stabilized currencies, bankrolled railways and imperial projects. And because they received news before everyone else, they could move markets before anyone even understood what was happening. The Rothschilds weren't the beginning of secret finance. They were the final, perfected form of older networks in a modern world. In the 19th century, states finally woke up and tried to contain this power through institutions: central banks, stock exchanges, clearinghouses, national bond markets. But as the institutions grew, the networks didn't disappear. They just blended into the new system and kept working in the background. And now we arrive in the present. Today's financial system looks orderly, transparent, regulated from the outside. Central banks appear to control money supply. States appear to manage capital flows. But beneath the polished surface, the old machine still hums. Modern shadow banking looks eerily similar to Venice and Genoa's off-book commerce. Eurodollar markets resemble Sephardi, cross-border credit networks. Offshore finance runs on secrecy, trust, and private connections, something the Templars would instantly recognize. Private equity and venture capital circles function almost like modern Masonic lodges. And today's biggest players, central banks, megacorporations, sovereign funds, never act alone. Meetings, channels, special relationships, alliances, they operate just like medieval merchant networks. Architecture changed, function stayed the same. Every major crisis shows it. After the 2008 meltdown, it wasn't the laws that decided who survived. It was the private networks linking banks, regulators, and investors. During the euro crisis, bailouts were shaped not by statutes, but by influence webs. Offshore systems were designed by expert networks long before states understood them. Calling all this a conspiracy is easy and completely wrong. These networks aren't malicious, they're structural. Finance cannot function without trust, and even today, states can't provide that trust alone. When markets panic, currencies collapse, or governments default, what restores order isn't the law, it's the networks, emergency credit lines, back-channel conversations, quiet phone calls between people who trust each other more than they trust the system. History tells us one thing clearly: behind every major public financial institution sits a private network. That's where the real power is. The Templars started the credit system. Jewish and Armenian diasporas connected continents. Italian city-states invented banking. Jesuits managed global information. Masons facilitated cross-border cooperation. The Rothschilds pushed communication speed to its limits. Together, they built the nervous system of today's world economy, a structure of trust, leverage, communication, and influence that often moves faster than laws, states, or even markets. And now the question turns to you. Are we really living in an institutional system today, or a network system wearing institutional clothing? The deeper truth is this: as the world gets more complex, trust becomes more valuable. And trust even today flows first through private networks. In a crisis, those connected to the right network survive. Those outside it pay the price. Is it fair? No. Transparent? Not even close. But it's the reality. Global finance was born in the shadows, and centuries later, the shadows still pull the strings. If this gave you a new perspective, subscribe. History knows the answers, and I'll show you where to find them.